Hello and welcome to episode 21 of the Craving Crypto podcast. In today's episode, we are going to be talking about how to set better stops or stop losses. So let's get right into this. Okay, so this one's going to be really awesome because I'm going to teach you the 3 top secrets that I have about using stop losses. But before we get into that, let's go ahead and do the market overview. So the total market capitalization is at $206,409,216,000. The 24-hour volume is $12,768,000,000. Bitcoin is at $109 billion in total market cap. The price is at $6,367. 24-hour volume is at $4.3 billion, and the 24-hour price change is down 0.86%. Ethereum is at $29 billion in total market cap. The price is $287. 24-hour volume is $1.6 billion, and the 24-hour price change is down 8.8%. Ripple is at $11,600,000,000 in total market cap. The price is 29 cents. 24-hour volume is at 245 million, and the 24-hour price change is actually up 2.25%. Bitcoin Cash is at $9.1 billion in total market cap. The price is at $527. 24-hour volume is 402 million, and the 24-hour price change is up 1%. EOS is back in this spot for number 5 at $4.2 billion in total market cap. The 24-hour or the price is $4.68. 24-hour volume is at 617 million, and the 24-hour price change is down 1%. So clicking on the total market cap price graph, we can just look here that we are starting to bounce after we have made this low around the $200 billion level that I was mentioning as support. So we just have to see if we can make a higher high here. If we break out from $213 total billion in market cap, that would signify a lot of upward momentum back in the markets, and it wouldn't surprise me if we reached the $230 billion levels again quickly. If we have a support failure at the $200 billion levels, it wouldn't surprise me if we tap the $180 billion quickly and then bounce back hard on the upside. The amount of selling pressure that we've had from the $290 billion level down to the $200 billion level is providing a good spring. So I expect this market to bounce really hard because the selling pressure can't last forever, and we've had a lot of selling pressure since the beginning of the year. So this is kind of like a soda can just shaking up with momentum and pressure, and we're just waiting for that cap to pop off and to see a kind of a spring and a pop out of this market. So I'm still bullish on everything. We have ABC corrections happening across a lot of the altcoin markets. When you make a new low like that, you just adjust your wave count and do a bigger ABC correction. And now that we have those painting, currently we're just waiting for the final waves to complete. We don't know if that's the bottom at the current price exactly, but we do know that once this selling pressure is done, the bottom will be in and we'll have a strong bull market return, or at least a good hard bounce on the upside. So don't sell all your long-term holds right now. It's probably the worst time to be taking selling actions. If you do have some extra dollar on the sidelines, put a little bit in, but you also want to keep your risk management in place and have at least 30% at all times and have at least 30 to 40% Bitcoin at all times so that you don't get wrecked on crazy altcoin volatility. Okay, so the first secret is understanding time frames. So we'll just go over to tradingview.com. For you that are new to this, TradingView is a platform that you can use to do charting on cryptocurrencies and on the stock market. So let's just open up Bitcoin and let's look at how someone might kind of play or think about when they're trying to put a stop loss in for Bitcoin currently. This is a question that I get a lot in my VIP area. So I like to really listen to my VIP members and the paid members a lot, so we're making this video in response to a question that I've been getting a lot, which is how do I better use my stop losses and how do I think to get the best stops in place. So looking at Bitcoin currently, those are first, you really want to understand what time frame you're trading in. So if you're trying to do a 2 or 3 month setup, which is what I recommend for people to trade, I don't like to tell people to trade day trading, meaning buying and then selling in the same day, because you're also working against a bunch of algorithms that are a lot smarter than you. So I tell people to stick to at least 2 or 3 month cycles. So that means that you're probably going to be mainly in the 1-day candlesticks, the 3-hour candlesticks, the 4-hour candlesticks, maybe a little bit of time in the hourly candlesticks, and even the same amount of time in the 4-day candlesticks and some of those bigger time frames. So that's really important to understand, because if you're looking on these bigger time frames, then you obviously need to be finding support throughout history. So if you have a bigger time frame that you're trading in, if you're aiming for a 2 or 3 month cycle, then you want to be looking at support zones months previously, even up to a year of price data behind you. Whereas if you're worried about day trading, or if you're trading in smaller time frames, then you might only want to be worrying about the price action in the next few hours. So you might use the hourly candlestick, or even sometimes people use the 15-minute candlestick and smaller. Although it's pretty crazy in these time frames and looks really jaggedy, so the probability of you making good money trading these smaller time frames is going to be a lot lower. Okay, so that's secret number 1, is decide your time frame. Again, I highly recommend for people to use the bigger time frames. Try to trade at least 2 or 3 month cycles. Even in the stock market, you don't want to be trading all these little swings, short time frames. If you do have a trading plan that works for you to do that, I'm not hating on it. I'm not saying that you shouldn't do that at all, or period. I'm just saying that you're going to get way better odds. You're probably going to be able to catch on quicker, and it's going to be easier for you to learn if you stick to those bigger time frames. So, that's tip number 1. That's secret number 1, is understand your time frame. Now let's get into secret number 2, because this is equally as important, which is average down. So when you're setting a stop loss, you don't want to just buy all at one price and then set your stop loss below a certain price that you bought at. That's not very smart. You're trying to get the best deal. When you're trying to buy a market, the goal is to get the best price for the market, or the best deal. You're going shopping and you're looking for the best coupons in the crypto space and in the crypto market. So when you're thinking like that, the best way to do this is to average down. We actually talked about how to set buy orders in my last Bitcoin video, so go check that out. It's the episode 20 of the Craving Crypto podcast, and we talk about how it's smart to average down. So I highly recommend going and clicking on that video and watching that first, and then coming right back to this. So hit that pause button and go watch that video. But basically, we show how you don't want to be buying all in at one price. With stop losses, your goal is to set the stop loss either a certain percentage below your average entry, or your entry price. And then if it drops down 10% or 20%, you get stopped out of your trade. And the main goal behind a stop loss is to basically eliminate further downside. So if a price gets reached, it takes you out of your position before the market drops even further down and you lose more money, right? So if you watch that video, the episode 20, and then you set your stop loss, 10% below your average entry price, and your average entry price is, let's just say you've been buying since the beginning of the year. So your average entry price is around $7,000 per coin, and you set a 10% stop loss below that. That means that the price of Bitcoin can drop to 6,800 and lower. So let's just take this percentage tool over here on the left-hand side. If you're new to this type of stuff, there's quite a bit of information that you probably don't quite understand in this video. That's okay. I've got a bunch of YouTube videos about the trading cryptocurrencies and how to use these platforms like TradingView. So just refer to my channel and watch those videos so that you hopefully don't get as lost in some of these later ones. But I like to try to keep things as simple as possible, because I know that a lot of my viewers are also beginners or new to this. So let's just click on this. We're going to click the percentage down tool. If you have a 20% stop loss averaging down from 7,000, that means that your exact stop loss price would be about 5,700 per coin. So, but if you're averaging down, another thing that I like to mention is you have some buy orders that aren't going to get filled. So maybe you have a buy order right here at 4,500. And let's just say that the price did go ahead and wick down to that $4,500 level. And then you set your average entry price now becomes closer to like 47 or 4,500 per coin. And then you set a stop loss 10 to 20% below that. That means the price of Bitcoin could go all the way down to 3,800 per coin before you get stopped out. Now, also what's nice about that is if you do get stopped out, you only lose 10 to 20% of your position, because you average down. You've got a nice cheap price, So if you do get stopped out, don't be scared or afraid to enter back on a position. It's not a bad idea to wait out for a few days, but don't be scared to buy back into the market in a dip. It's the best thing that you can be doing is accumulating panic and then averaging down and setting your stop loss in a smart place so that hopefully you don't get stopped out. But if you do get stopped out, don't be scared of the market. You're playing these big cycles, so you do know that a bull run is going to come after a big sell-off. What goes down is likely to come up, just like what goes up is highly likely to come down. So, don't be scared to buy back in at 52, or even if the price went to 45. Just start averaging back down into your position. Because, if you take a 10% loss right here, let's say you average down from like 9,300 down to the 6. Oops, got alerts going off because the crypto markets are always exciting. So I get text messages all day, alerts and stuff. So if you've averaged down, maybe your average price is like 7,600 or something like that, and then the price goes down to here at 56 and you get stopped out, you could be averaging back in now. We've had a bit of a sell-off again, so you could buy in a little bit now, set some buy orders at 47 or down here on these lower support levels, and if the price does go ahead and drop lower, you get a deeper average entry, you set another 10% stop loss. And the likelihood of you getting stopped out twice is pretty low, especially, if you are averaging down and not trying to buy all at the one exact price. So, that's some tips on stop losses. Don't try to play the little cycles. Understand your time frame. Always average down so that the price, if it does drop a little bit lower, then you only lose 10 or maybe 20% of your investment. Hopefully not 20. That's a pretty wide stop loss, but sometimes with altcoins, you might have to use a little bit of a wider stop loss because they're pretty volatile. So yeah, understand your time frame, average down, and then last but not least, the last secret, and I talked about this a little bit in the second one, is just use strong support levels. So you can either use a given price, like 10 or 20% down from your average entry, or you can use a strong support level that's below you. So for example, we've got this support level at 4,700. If that failed, you would probably see downside to 3,000 or 3,200. So if you average down your, let's say your average entry is like 5,000 per coin or somewhere around in this area, you could set a stop loss at that support level, and that would be about a 16% down from your average entry. So you can use strong horizontal support levels to set your stop losses there as well, so that if that price actually does fail as a support level, you don't have to risk further downside. You can start averaging back into your position. So that's the third secret, is to use strong support levels. So let's just quickly reiterate on this. Secret number one is understand your time frame. Again, I like to stick to the bigger time frames. 1 hour candlesticks are a little bit shorter time frame, but you've got like the 4 hour, the 6 hour, the daily candlesticks, even the 3 hour candlesticks, even up to the 4-day candlesticks. I use all of those time frames when I'm trading these bigger cycles. So understand your time frame. That's secret number one. Secret number two is average down. So don't buy all at once. You've got some dollar, tether, USDT on the sidelines in your portfolio because that's good risk management. So you don't want to be 100% in the crypto markets. So you've got money to work with, and so you want to take that money, you just want to average down. Be very careful with it. Set really low buy orders. Some of them aren't going to get filled, but the ones that do get filled, you take that position and then you set an average. You set a price or stop loss below your average entry, and that's how you don't have to get the exact bottom, but once you do find that bottom, you get a lot of gains on the upside, and you can kind of eliminate a lot of the risk with that. So average down, that's secret number two, and last but not least is to use those strong support levels. So these horizontal price levels down below from your average entry point, find those levels and use them as stop losses. Like, again, one more time, a great example would be is if you bought at current price, you could set your stop loss at 5.84, and if this lower support level failed, then you might see further downside to 53 and even down to the 4,000 sub $4,000 levels. So you'd want to have your stop loss there and start to average back in if you get stopped out lower. So that's an example of using the horizontal support for your stop losses. So all of these methods do work for altcoin positions as well. You might want to have a little bit wider entries Don't use as big of positions in altcoins as you would in Bitcoin. Obviously, I don't recommend risking very much of your portfolio in altcoins. They're way more volatile. They retrace harder. Some of them fall 90% from their tops, whereas Bitcoin is going to be more stable, more liquid, more volume, and you don't have to worry about quite that much volatility. So just plan around the volatility if you are using altcoins, but all of these methods work perfectly for that. I do not have a question from the comment section, so please, damn it, ask me a question. Somebody in this video, go ahead and in the comments below, just say, hey, I was wondering about this, or I am having problems working through this, or I don't know how to do that. Just write it, ask your question, and you will be featured in my video tomorrow, the Craving Crypto episode 22, Friday. So, you know, put your comments down below. I don't know why you guys aren't asking your questions. You're telling me that you appreciate my videos, so thank you for those comments. But, you know, I really want to be answering these questions for you, so please stop dropping, or please start dropping those below and stop being lazy. Ask your questions. I know you've got them. My Coinigy sign up right here if you want to do technical analysis on altcoins and coins that aren't on TradingView, so you can use my referral link to sign up right there. BitMEX if you want to do leverage trading, although I do not recommend this for beginners, but this allows you to do, you know, 5 times your leverage, 10 times leverage, even 100 times, even though 100 times is kind of useless. That's too risky. But, you know, sign up right there if you want to do leverage trading on Bitcoin with my BitMEX referral link. If you like what I'm doing, I've got a Bitcoin donation address right here. You can go ahead and send your donations over, even a couple dollars, $5. Shit, I'll just throw it into some long-term portfolios and hold it, and then let you guys know my results on that stuff later down the road, and it'll be a win-win for everybody. So, you know, that's my donations. I've got a website if you want to learn more in detail how to get into trading cryptocurrency, how to get good at this. You know, you've probably been making mistakes. You probably have lots of questions. Some of them you might not be able to just ask in a simple YouTube video. I understand that. We've got the Discord chat, which allows you to connect with all the other traders in the course and in the platform to ask your questions in the questions box. We also post signals so that you can copy my trades. I update on the markets consistently there. We've got over 1,000+ members in there currently. You can go onto my website right here, highaltitudecrypto.io. Click on the shop. Go look at the reviews in the description below from some of the other members. See what they've been saying about my product. See if it's something that's going to work for you, and go check that out. highaltitudecrypto.io if you want to learn more about trading Bitcoin. Thank you so much for tuning in today's video. I hope that you learned something. If you have any questions about how to set stops, go ahead and drop them in the box below, or really just any questions at all, and I will see you guys in the next episode. As always, stay profitable out there.